The same institutions which enabled Bitcoin to go from $20,000 all the way to 126,000 in the last cycle have a new favorite cryptocurrency. This crypto goes by the name of Hyperliquid, which I'm sure most of you have heard of. Some of you may have even tried their decentralized crypto perpetuals platform, but none of us, and I mean none of us, could have ever thought in our wildest dreams that in 18 months, which was the time since its launch, that Hyperliquid would become a top 10 cryptocurrency. And in a month where Bitcoin has done nothing but consolidates in a bear flag at the heart of the crypto bear market, Hyperliquid would go up by 67% and have its own ETF after successful launches, historically successful launches, and all of TradFi like Bitcoin, Ethereum, Solana. Hyperliquid. Why? Why did this crypto get its ETF? Why are institutions all over it? Why are we surging so high in price? And why Crypto Kid believes it's going to go even higher in the long-term future? These are the questions which will be answered in today's updates video. If you end up enjoying it, please do me a favor and destroy the like button. Subscribe if you're not a Crypto Kid already. I know we predominantly make Bitcoin updates, but because nothing has really changed, I wanted to focus on something else. Something that has generated $790 million of revenue, almost double the revenue of Ethereum. Ethereum is the second largest crypto, by the way, with 240 billion in market cap, whereas Hyperliquid is at 17 billion. This thing deserves the attention, and I felt like I must update you guys on it. But very quickly, Bitcoin is in the support line of the bear flag. If we lose the daily support line, which I think is going to happen anytime soon, then I see a drop to the $67,000 area, which upon that we can reevaluate. The month of May is over. We closed negative by 3%, hoping the upcoming months will not be as bad as we expect them to be. Hyperliquid, what is it? What is Hyperliquid? What does it do? For those of you that don't know, for those of you that have not tried it before, we all use some sort of cryptocurrency exchange, whether if it's Weeks, whether if it's Binance, Bybit, BTCC, we use some sort of crypto exchange. Hyperliquid is almost like them, but instead of having many features, you can only trade perpetuals on them. There's no spot, there's no crypto first time buying. You can just trade perpetuals and stake your Hyperliquid token. You connect to it via a dApp wallet. And finally, the order book and the design system for trading is built all on chain. On centralized cryptocurrency exchanges, the trading order book is off chain. All transactions are handled off chain. But on Hyperliquid, you can click trades and it will take you to its respective transaction hash on the Hyperliquid Explorer, which is super cool. Because in times like 1010, where cryptos go through severe cascading liquidation events, where tokens like Chainlink has a 66% candle on a daily, weekly time frame, where things like BNB didn't do so much, where things like AVAX go from $30 to $8 back to $23, on-chain settlements prevent individuals to lose more money than they should. Hyperliquid processed half of the liquidations on that day, but the exchange didn't go down. All liquidations, all trades were processed successfully, whereas some centralized exchanges faced issues. So that was the day where I thought to myself, okay, I see that Hyperliquid maybe has a place in this world. Many people were trading meme coins. They got used to decentralized trading. Maybe they will want to use Hyperliquid to tap into the Bitcoin world, tap into the established crypto world of trading. But I didn't know that they made so much money. They made $790 million. But that's not even the most interesting part. 99% of that revenue, or whatever revenue is generated, goes back into buying back the coin and burning it. So since the October crash, where Bitcoin went down 42%, Ethereum is currently down 57%, Hyperliquid went up by 164% in value, whereas its market cap shrunk by 24% due to the burning mechanism. The more people that use Hyperliquid, the more people that trade on Hyperliquid, the more money that is generated, it goes into buying and burning the token, making it more scarce, therefore making it more valuable since demand stays constant or goes even higher, which to me is genius. And this is why the institutions like it. It's a product which makes money, not very common in the crypto world. So it's kind of like a company stock. Not really, but it's the closest thing to it. There's huge amounts of buybacks happening. There's a community behind it. And it has extra utilities like getting rebates from trading. If you are a token holder and you're staking, you get rebates from trading. If you're a large trader, those discounts can equate to a lot of money saved. So it has real utility. It has real utility. Therefore, we got an ETF. The Hyperliquid ETF on Friday alone just got $30 million of inflows. And it broke records. In the first 10 trading days of the Bitwise BHype ETF and other related hype products, they absorbed 1.04% of the entire market capitalization in net inflow activity. This marked the strongest debut of any spot ETF on record, excluding Bitcoin, and outperformed Bitwise's Ethereum ETF and Solana ETF. This is the heart of the crypto bear market, and $30 million for a $17 billion market cap coin is huge amounts of money. And this number will only get more and more and more if the Hyperliquid BHype ETF on Bitwise does well. Then the bigger guys like BlackRock and Fidelity may at some point also list them, perhaps after the Clarity Act. And I bring up the Clarity Act. This is a separate video which we're going to upload either tomorrow or the day after. There's huge beef between the banks, i.e. Jamie Dimon, and the crypto world, i.e. Brian Armstrong. They do not want the Clarity Act to pass, but President Trump wants it to go through. When the Clarity Act passes, it's very plausible that Hyperliquid gets offered to American investors. Currently, Hyperliquid is not available in the US. But the CFTC chairman just launched crypto perpetuals for one exchange last week. And this is a huge step for DeFi. So I think we may get to a point in the future where Hyperliquid is catered for American audiences. And maybe then bigger issuers will jump on board. But even if they don't, Hype will see more traction, more revenue, more burns, therefore, theoretically, higher price. So I found it to be super, super interesting. When you look at their competitors, yes, you have DYDX. Yes, you have Uniswap, which predominantly is a spot exchange. DYDX has its own layer 1, which can handle 2,000 transactions per second. But Hyperliquid stands out because it can have 200,000 transactions per second with a sub 10 millisecond latency, and there are no fees like blockchain fees when you open or close transactions. Super, super cool. Like I geeked out a lot, and I'm happy that I did because I think I stumbled across, well, not a gem anymore. It's like a massive rock that everybody can see, but not many people understand that it's a valuable rock. Look, Robinhood has a $70 billion market cap. Tier 1 exchanges, they're not public, so you don't know how much they're worth. But Robinhood is a potential competitor that you can race Hype alongside. So Robinhood is at $70 billion. We know that cryptocurrencies go much higher in market capitalization than what they are really worth. So I think it's a good level that hype could reach in the next bull run. If we were to reach a $70 billion market cap with the current supply, that would imply a $300 token price. But since there's a burn mechanism, that number can even be higher. So when we do macro technical analysis, we're currently in an ascending, rising channel, where the height of the channel is at $95 per coin. I am going to accumulate hyperliquid, but in the very short term, on the 4-hourly time frame, we have a bearish divergence. We had a similar bearish divergence on the 4-hourly time frame with Zcash. And what happened with Zcash? We gave this warning. It fell by 25%. So I'm looking for a similar retracement towards the $53 to start accumulating some hyperliquid. But then I'm going to jump into the bandwagon. I am personally sold, all right? There's a few caveats. It is decentralized, but it's not extremely decentralized. It's like Solana level decentralized. The nodes and validators that make the system a DEX, essentially, they are clustered together under, I'm not going to say one entity, but they're not spread out all across the world like Bitcoin. It's centered, right? Meaning that if there is a decision to delist a token, most of these validators are going to go along with what the group does. It's not going to be a proper consensus mechanism, but that can change in the future. More and more validators could be, more and more nodes could be purchased and or staked, and in the future that can change. But currently, it's not fully maximum decentralized. However, it is better than other alternatives. Another caveat is the regulation, which I see to be on track to do good successes. And the team have some tokens which are going through vesting, and that vesting will go into 2027. So there could be some periodic selling pressure, but that's normal. That's normal with any project. There were no VCs involved with Hyperliquid. And that's a wrap for today's episode. Thank you all so much for watching. If you enjoyed it, destroy the like button, please. That would be so appreciated. I'll leave a link to the X article for anyone who wants to go through it one more time. Guys, the next episode is going to be fun. We will explore the debate and almost fight between the banks and the crypto bros and how Trump is placing himself within this fight. So stay tuned and I'll see you all soon. Take care as always. Bye-bye.